Hey traders, happy Sunday and welcome back to another video. Each week on Sunday I do a little bit of a market pre-prep, if you will, just taking a look at setups and things I'm interested in myself for the week ahead. And I figured no better place to start this week than the US dollar, which had a pretty good run last week. This is a 4-hour chart that we're looking at of the US dollar currency index, or the DXY. And what you'll see here is that we actually have seen a nice clean breakout to the upside this past week. Now, does this mean the US dollar is full-blown bull mode? Well, probably not yet. In my personal view, we still have a lot of headwind. However, it was a nice, impressive run last week after a very, very tumultuous week, if I could say the right word. Basically, we had CPI numbers and interest rate hike decisions coming out at 50 basis point rate hike, and inflation was cooler than expected. So why is the dollar rising? Well, sometimes the market just does some crazy stuff, but it must have not loved something projecting into the future, as we saw the S&P 500 come down pretty hard, right? The S&P completely took out support. If you watch the indices, then you probably noted this on your chart this past week. We had a huge level of support get broken on the S&P 500. Now, these two things, I believe, go hand in hand. Right now, the US dollar and the S&P have a pretty strong negative correlation, meaning when one goes up, the other goes down. And we take a look at that US dollar, what you'll notice is that we had a pretty good break to the upside. Now, again, I don't necessarily think that we are just out of the clear here. We very well could just be going into consolidation and going into a choppy market, because yes, on the 4-hour chart, you've got this little breakout. But if we look at the daily chart, we've still got a lot of headwind. The market has been very, very downward overall. Right, we topped out, we put in those 3 highs and then just completely have fallen since then on the dollar. So for me, this is not out of the water yet by any means. We need to start seeing, if you're going to be a dollar bull, in my opinion, we need to start seeing stuff like this, right? Just clear breaks to the upside, followed by higher lows and just clean moves, even on the daily chart, before I'm really going to start looking for dollar longs. With that in mind, there are some other assets that I want to take a look at. So if we look at EURUSD here today, what you'll notice is that the euro dollar on the daily chart looking pretty healthy, continues to trend higher. And if we narrow down into the 4-hour view, you'll see more of the same, right? Price in a nice overall uptrend, right? And price even pulling back here towards the end of last week to what I would consider a pretty major level of support for the bulls. Now, as we pull back into this area, this looks actually like it might be sort of the contention point for buyers. Like I said, with a pullback like this, you would expect bulls to hold this level pretty strongly. And if they don't, you have to ask why. Why aren't the bulls able to hold a major zone like 1.058? As that would be very, very important, right? If you start seeing signs of sickness, right? And what I mean by that is, you see breakouts and closes and hey, where the heck are the bulls? That could be an early sign to jump ship. So in my opinion, how I would approach this is, if I was to take a euro dollar trade, we've got a nice upward trend. Things are going well. The dollar, in my view, is still not necessarily bullish. In fact, if anything, is more leaning towards the bearish side of things, as CPI has cooled. And, eventually I think that this rate hike cycle stuff will lose its sparkle, if you will, for the dollar, as it kind of already has. And I don't think that that is necessarily over. So as the euro dollar pulls back, I would say a bullish setup here would be right around this area and stops going underneath this little pivot low, right? So we saw right before this major jump to the upside, right? Price coming all the way down into this area, right? And then putting a stop just below that structure point. That is a 50 pip stop, which is very reasonable if you're a swing trader like myself. And even if you're a day trader, you might be able to get in there and tighten it up further as the markets get open. If that's something you're interested in looking at, of course, by all means. This is not financial advice. I'm just sharing my personal thoughts on markets. I think that the euro, as it pulls back into this area here, looks more like a buy than a sell. That would be basically my bias on something like EURUSD for those of you who watch it. Next up is pound USD. We'll take a look at the pound for those of you who are pound dollar bulls. This thing little lackluster compared to the euro dollar. The euro dollar held support beautifully last week. For the most part, I mean, it did end low, but still held overall bullish. Not so much the pound. The pound lost its steam, if you will, right? Again, this was the level that we had discussed. Hey, buyers should be very apparent here. And if they're not, it shoots to the downside. And that's exactly what happened. Failure happened in this area, and you could probably even imagine that a lot of traders bought here as normally, you know, I'm not even going to criticize. This looks like a decent setup, right? If you were to go and say, hey, from here on, this looks like a half decent setup, I would agree with you. Because again, market looks strong, should hold. If it doesn't mean that you're just an idiot and that the markets are lying to you. It just happens that way. Sometimes you have a setup and it looks clean and the markets just don't hold that level. And, you know, as traders, we aren't perfectionists, or you shouldn't be, because the market will very quickly humble you in that department. The reality is, okay, you take a trade and you say, where's my risk? I'm gonna risk small. Okay, done. I'm out of there. I took a loss, right? I didn't even take this trade. I'm just saying that this is, being very honest, a trade that I could see myself jumping into from a technical perspective and just accepting defeat if price breaks through support. That's okay. Anyways, pound USD, is it just dead in the water? Well, no, I don't think it's completely dead, but it just may be entering more into consolidation. I would say, you know, if you're a full-on pound dollar bear, you've got still a lot of headwind to you, because you do have major support levels that you could probably find off the daily chart, right? You've got key support here, which is probably about a 38.2% retracement off this. Yeah, about a 38.2. So you still have headwinds. I wouldn't say, oh, this is full-blown bear mode now, because again, we've still got on the daily chart a pretty healthy chart. So definitely not bearish on the pound USD, but again, the euro looking actually more attractive even. And if we cross the two, euro pound, you can kind of see what I'm getting at here. The 4-hour chart exploded to the upside as investors tend to favor the euro over the pound more recently. Very interesting little change in speed there with those two currencies. Let's go take a look at the watch list. So this is what we're looking at right now, is the Edge Finder. This is our market scanning tool that we use to help find better setups. This software is built by my team. I'm a software engineer by trade, and I now run a company where we build trading software. And this is our sort of flagship product. I also use it for my own trading. Each and every day that I'm trading, I use this tool. It is so helpful. And what it does is it basically breaks down all these different categories. We have major, minor currency pairs, we have indices and commodities. And what I could do here is it gives us a bias in each one of these categories that you're seeing across the top hand of the screen. COT data, retail sentiment, seasonality, trend reading, GDP growth, inflation, unemployment, and interest rates. It's going to take all those factors into account, and it's going to give us a bullish or bearish based on a positive or negative number in each one of these categories. It's going to tally it up in the score column, and then it's going to give us a buy or sell bias, right? So looking at this overall, what we can see here is that I've just filtered out the neutral one. So this is showing stuff that is got a strong signal one way or the other. And if I take a look, for example, at let's just take euro yen, because I know I liked that one last week. Euro yen. So euro yen here had a really nice run last week. And again, you can see this is a nice healthy uptrend. So part of the thing that the Edge Finder scans for is the trend category. And euro yen happens to have a strong trend, or a +2 in this category. And so overall, euro yen looking pretty healthy to the upside. Now the question is, you know, you zoom into like the 1-hour chart. Where do we get involved? The 2-hour chart. You know, you sort of have market structure around here. And I bet you that that is a 61.8% retracement. Yes, pretty close, right? 61.8% retracement lines up nice with this previous resistance that turned now potentially into support. So I like euro yen on the long side, and we could break this down further and we could say, okay, well, euro yen, why, right? Sure, the technicals look nice. There's a support level and there's a Fibonacci retracement, but why do I want to buy the euro against the Japanese yen with my hard-earned money? Many traders, they stop right at the technicals. They say, okay, technical analysis tells me to buy. Okay, cool. I'm going to go into a long position. And that's on you. If that's what you want to do, if you want to trade purely technicals, then go for it. I'm not here to stop you. But I will say that in my trading career, stuff like this has been far more helpful, because if I look into the full picture, if I go into the individual view of EURJPY, and we load this up on the screen, I can get a full picture as to why this thing is getting a bullish reading based on many metrics, not just the technical analysis, but getting a automated calculation of each thing. So look at the commitment of traders data, and this is really where things get interesting. Looking at the COT data, we see, and that data, by the way, shows up right around here. The COT data shows us that in the euro category, institutional traders and investors are 67.91% long with their futures contracts on the COT data that we get once a week. Comparatively speaking, the Japanese yen, 77% short. Okay, so now we have something very interesting. On this department, smart money is long, right? That is what we're seeing from the non-commercial reporting on the COT data that we get once a week. Like I said, the software imports all this stuff and visualizes it for traders to use very easily. Okay, so on top of that, we take a look at seasonality. Seasonality is showing us that during the month of December, we tend to see a positive rise on the euro yen. Taking a look at the trend reading, very clear upward trend. That's pretty simple. GDP growth and interest rates favor Europe, whereas inflation and unemployment still favor Japan. So in the net, we get a +5. This is a bias of buy. It's not a magical signal, but is a nice confirmation or extra confluence to the trade setup that I already saw. This is how I use the Edge Finder over and over to catch the best setups that I trade. I've been using this thing as an automated tool for about 6 months now, but the concept has been part of our strategy at A1 Trading. Myself and Frank, two of our two traders and within the company, we've been using these concepts for a long time, over a couple of years now. But the reality is that having an automated software to do that is really the key. If you don't already have the Edge Finder, do you want access to it? Grab it down below in the description if that's something you're interested in. Again, this is our company's software tool that we've worked really hard to build. And if you're interested in it, you can grab it for a discount using the link and promo code that are in the description of this video. So check it out and hope you enjoy it. If you have any questions, we do have a full support team. I have several employees who are trained in the software to help you out. You can schedule a call if you want to ask your questions. If you're confused about anything, please take us up on that offer. The way to do that is just click the link that's in the description, and you can actually request a free trial, even if that's something that you're interested in doing. So there you go. Speaking of smart money stuff, we talked on that for a little bit. Let's take a quick look overall this week at what we're looking at for the next couple of days. If we take a look at this, we have some interesting stuff. So I mentioned that Japanese yen is still very heavily short from institutional investors. 77% of the long contracts, 77% of the contracts opened from the non-commercials on the COT data. I know that's a lot. It sounds like a lot. It's just the non-commercial reporting. That's basically small banks, hedge funds, institutional traders. Contracts open, 77% of them are on the short side. Very, very interesting to note. So that shows us, okay, AUD, JPY, CAD, SPX, these things tend to be more shorted by institutional investors. Flip it around, you've got US dollar, US oil, Japanese stock market. These things are more on the long side. So interesting to note which things fall where. And when we look at this, again, we combine things. We say euro yen look good. That's where I would actually take a trade, is when the Edge Finder and the technicals line up nice. Now, I like the watch list. It's my favorite page on the Edge Finder because I understand each one of these metrics. And if you do use the tool, then you will too. Once you go through sort of our help section, you can read all about how the tool functions, what it does, all the different metrics, how they're all calculated. I encourage you, if you already have the Edge Finder and you don't even know about this, go to the help section and just read and watch videos. There is plenty of information on how the tool functions and how you can use it to better your trading. So definitely check that out. But anyways, going back to the watch list. So this is basically where I dig for setups. You have pound dollar, which showed up as actually a possible sell setup, which I thought was interesting considering what we talked about earlier with pound dollar. What about AUDUSD? So AUDUSD considered a sell actually, which is very intriguing. So if I take a look at this, so you can kind of see the upward momentum has sort of been lost with this one, though I wouldn't necessarily just go shorting it at current prices or anything. Let's talk a little bit about what's happened. We broke through major support here. So this support level, you would have expected, okay, a rally from here, right? Nope, didn't happen. Sellers took over this area. Now on a retest, even saw resistance once again. So very interesting to see that. And I guess if you're looking at Aussie dollar, there's not really a level that I see just yet. I would actually need this thing to probably sell off lower in order to get me sort of like a fib to line up or something like that. So I do like this thing more on the sell side than on the long side, but I can't justify really taking any trades on this one. So this is probably just a no trade for me until we watch some lower highs, lower lows to kind of come into this market. So we'll go back to the watch list. And this is, again, this is how my process works whenever I take setups. NZD-JPY, this is another one that I actually want to be long on if I can get a setup. I missed it on Friday, so price started out low. I did not take this trade. Shoulda, coulda, woulda, but I would have been happy to pick this one up had I seen it at the right time. So yeah, as price pulls back, it's pegging off this support pretty well. So I would be interested in trying at this area with a stop loss below the lows. If price does double back, I'll probably look to take that trade this week. That's one that I'm interested in myself. And thought process there would be, okay, stops below structure, it should hold. We've held this level very long, very well. Buyers should be able to continue to hold that. If it does rally, I wouldn't actually be looking for just to retest the high. I'd be looking for a continuation move. And in this case, I would trail stops. So for example, if price starts rallying in my favor, what I'd be looking for would be to trail my stop loss, take that stop loss from here and go ahead and move it behind structure, right? If you are familiar with my trading style or you've watched some of my live trading videos, you know that that is sort of my style, is to trail stops, follow markets, and try and follow trends rather than trying to, you know, just slash off profits at the top, right? That's a very common approach. I personally don't love that because oftentimes just when you close out, the market continues to trend in a healthy manner, and you cut off the best part of the meat basically right by just taking it off the top. And I understand that's, you know, sometimes traders will take partials. That's another option that some people like to do. But for me, what I like to do is I like to trail stops. And so anytime I get a higher low, right, usually what I do is I like to see a break through the high, right? If you see that move, great. Then on a higher low, that's really usually where I'm trailing stops and just locking in profit and seeing what the market will give. So yeah, I have whole videos on that. If that's something you're interested in, just look up on YouTube, Trailing Stop, Trader Nick, and you'll see my videos. I think there's more than one on that topic. So yeah, you can check that out there. Of course, if I take any of these trades, you guys will be able to see them within the Discord. If you're not already inside of the group, then make sure to join us. The link is down below in the description to sign up. Again, it is something available. You can see all the trades that are being taken. So I analyze these things, no hindsight, you know, literally as I take them, I drop a message, a picture, you know, the edge finder bias, everything about the trade, everything that I am seeing and why I'm taking it. If that's something you think would be helpful to you, then make sure to join our VIP. Again, it is available down below in the description. Or if you want the edge finder and the VIP, you can actually bundle them together. So check it all out down below. Thank you guys very much for tuning in to this week's video. If you enjoyed it, hit the thumbs up button. Have a great trading week, and we'll see you next time.